So without further ado, we have three funds that we'll be talking to today. First, we have Arvind from Hashed Emergent, and we'd like to start with a brief introduction of your fund and what you're investing in.
Yeah, thanks Alex and thanks Edward for hosting us here today. My name is Arvind. I work with Hashed Emergent. Before I dive into Hashed Emergent, let me give you guys a quick 2-minute shtick about Hashed. Hashed is an investment firm that was started in 2017 when 5 of our founders came together, read the Ethereum white paper and went like, hey, this is a new distributed internet and it's going to have a protocol economy. And they derived 3 key insights from reading that white paper. One, decentralized organizations with open governance standards will definitely prevail over centralized counterparts. The second, real world assets will be tokenized and brought on chain. And third, all human activities would move from the real world to the virtual world. Now, taking these 3 principles, they've been investing for about 5-6 years now, managing close to 600 million, in 3 pools of capital. And in this process of investing, both in Asia and globally, they essentially set up a fund last year alongside Mr. Tak Lee, who was a venture partner at Hashed. And this fund is now focused at emerging markets. And we are known as Hashed Emergent. We are primarily focused at emerging markets, and that's where the name comes from. And how we are trying to differentiate ourselves and also stick to the tune of Hash thesis is also on two aspects. One being emerging markets, and the other being rather than a focus on Web3, we are identifying what we call as Web 2.5. And I will definitely get into the nuts and bolts of each of these things together. Thank you.
So just to drill down a little bit further, so your fund is focused on emerging markets. Can you explain a little bit more about why emerging markets are so compelling compared to traditional tech geographic locations like Silicon Valley?
That's a great question. So why we were set up is because, as I mentioned earlier, Hash set up its second fund, and it had made considerable investments into India and a few other emerging markets. And why we feel and we sense that emerging markets are an enormous opportunities, because you can look at it from both a founder's perspective and a user's perspective. Now, from a founder perspective, you see that there are unique problems to solve and there's a huge market to tap into. And from a user's perspective, you see that using Web3, you're able to tap into global liquidity and you get to access global products built by global founders as well. From our perspective as a VC fund, how we see this, emerging market play is that we have differentiated deal flow, we have differentiated networks, and we have differentiated domain expertise to tackle these markets. Now, we see, emerging markets as we already see that, Silicon Valley has tapped into existing markets and, have already saturated them. But we see emerging markets as the next major engine of growth, not only for their own local markets, but for global internet-driven markets as well.
Okay. What is Web 2.5? Because I bet not everybody here understands. I'm one of them. So can you explain?
Yeah, that's a great question. Now, before I dive into what Web 2.5 and Web, whatever is, I think it's important to go back to the roots of what Web 1, Web 2, Web 3 is. And if I could summarize it, I would say Web 1, the transition from Web 1 to Web 3 has been moving from static web pages to dynamic web pages to, pages that you can fundamentally own. And this is a transition from passive usage of the internet to participatory and ownership-driven usage of the internet. So if I could summarize what Web3 offers us as value, it is a transmission of, Web 1 gave us transmission of data, Web 2 gave us transmission of information, so that we could create pools of platforms.
And Web 1, is that in the 90s when you visited a static web page and you could just read it and that was it?
Exactly.
Okay.
And the early 2000s brought us Web 2 with a lot of platforms, but we see Web 3 becoming a protocol-driven economy and an internet, and this will enable the transmission of value. And that is the fundamental, pieces for the new internet, where, you can ascribe value to assets on the internet, and you can trustlessly transfer them between owners as well.
And so then what is Web 2.5 specifically? Does it have a different definition?
Oh, that's a great question. So I think since I dived into what Web3 is, I think how we see Web 2.5 is, this is a transition from Web 2 to Web 3, and there are certain factors that enable that transition to happen smoothly. So it's not just a technology transition, there's a societal transition happening. So in light of that societal transition, we see two factors playing in. One is the scalability of Web 2 frameworks brought to Web 3 frameworks, because that's what enables mainstream mass adoption of Web 3. The other is compliance. Now, when I say compliance, I mean compliance either to code or to law. And it is to enable, the last decade of Web 3 has always been about regulatory arbitrage. And this decade of Web 3 is going to be about proactively looking at regulations and understanding how to design your systems in a pragmatic way. So we believe that scalability and compliance are two crucial factors to enable Web 2.5, and that will eventually lead to mass Web 3 adoption as well.
Okay, moving on. So as managers, you guys have a terrific track record in blockchain and crypto. So why invest in Web 2.5?
So I think coming back to why we think Web 2.5 is important, it's fundamentally about trust. And I know this is a very philosophical argument, but trust is at the foundation of any sort of commercial relationship, whether we write it on code or whether we write it on, by law. So I think, we can all agree that blockchains in themselves are designed to be trust machines. They enable people who participate in these blockchains to use these trustless machines, but to transfer value between each other. We believe that Web 2.5 is that ability to bring that trust back to the mainstream audience using systems that are compliant in nature, compliant with the law, and also scalable so that it's easy to use. At the end of the day, it shouldn't feel like the friction of Web 3 is imposed on the mainstream audience. So for us, a key aspect of how we look at things is also to see how existing standards and frameworks can be applied to Web 3 and then brought to the mainstream audience. And just to give you an example, couple of our portfolios that deal with allowing a person to become their own bank, for instance, meaning that they can custody their own goods or their own assets. Now, doing that with pure Web3 frameworks is a highly technical task. Now, what they do is they abstract away all that complexity, give you mechanisms to protect your private keys, and also enable you to custody your assets in a safe and secure manner. So, bringing these two worlds together, where you get the security and decentralization of Web3 alongside the scalability and user friendliness of Web 2 is super important to us.
Awesome. Great. So let's dig in a little bit into the industries. So what sorts of industries is your fund looking at in the emerging markets in the Web 2.5 space? If we can get into examples, that'd be great.
All right. So as we are a thesis-driven fund, and how we've described our thesis and getting into the sectors that we are investing into is tripartite. We are looking at three sectors primarily. One is entertainment, one is finance, and one is social. And why we categorically made these three sectors our most important sectors are two reasons. One, they're already digital in nature. All the value that's accrued in entertainment, finance, and social sectors are virtual, value. And two, we believe that once Web3 is integrated into these sectors, not only will Web3 have such an impact on these sectors, but these sectors themselves will have a radical impact on society itself. So we see a flywheel effect in our choice of sectors and how it applies to Web3. In terms of examples, I think in entertainment you can see new forms of content creation, new forms of creator and consumer relationships that you can build up. From a finance perspective, you can think about the P2P relationships that are built, P2P financial relationships that you can build. So you can layer on services like payments, banking, lending, and these are very, very crucial to emerging markets, which is our primary thesis. And in social networks, we also see applications like, social networks and reputation systems and all the likes of such. Definitely can get into more examples from our portfolio itself as well.
Yeah, fascinating. We're doing okay on time. Can you talk about the risks of the early stage investment specific to emerging markets?
I will definitely get into that question. I just realized I missed out on one major thing. As much as we are really into like the three sectors I mentioned, we're really doubling down on gaming. And why I specifically want to mention that is because I'm a gamer myself. I think gaming is going to be one of the biggest markets in the world, and it'll not really just have an investment impact, but like a very social impact on our lives. So we are really doubling down on gaming because blockchains really allow the gamers and developers to economically align themselves now. And it really creates new mechanisms for monetization, because now you fundamentally have ownership within games, and that's a whole new dimension for monetization and stickiness of users, increasing ARPU, increasing LTV of users. So yeah, we are super bullish on gaming and blockchain together. And
great, no, that's good context. And now let's talk about the risk.
Oh yeah, there's definitely a lot of risk. We are in the Web3 industry. We're from emerging markets too. If I could list them down in one go, I would say the first thing that comes to my mind is the diligence risk, the number, especially from an emerging market perspective, I would say the volume of deals that we see, although it's a good problem, is definitely something tremendous to deal with. So this requires us definitely to have like on-ground support, having local context, and also a good technological understanding. The next risk that we see is foreign exchange risk, especially operating in India, where there's specific rules around how there's capital controls in India which restrict our inflow and outflow of capital. How we limit ourselves against this particular risk is that we are working with Ternary, and we have our fund deployed through Singapore, and we are pretty much insulated from that risk. Another key risk, especially because we work in Web3, is policy risk. And as a lawyer and investor, and with my colleague Vishal, we take policy very seriously. We have our own in-house policy team, as well as a very strong legal team that not only dives into the legal problems for our portcos at the time of investment, but proactively also help them throughout their growth stage as well. Couple of other risks that I identify in emerging markets is exit opportunities. And this is not particularly true to India. I would say other emerging markets have like certain exit opportunities that are limited, but India, for instance, has opened up its IPO markets. The securities regulator has opened up the IPO situation in India. I think other risks that really pertain to emerging markets also include risk around how to monetize your business, because local users there have far less purchasing power, and hence you have to really design your product in a way that's suitable to that environment. A corollary to that would be also localization of your product. And largely, there would also be things like, your other general, early stage startup risk, technology risk and running out of cash, that sort of thing.
So the next question, the follow-up, was to actually drill down on that a little bit, comparing to, traditional tech venture investments in more established markets. Like, what is the risk-reward profile? Like, can you compare it to your emerging market investments to?
That's a great question, yeah. So as much as I laid out a list of risks over there, I think the opposite effect to that is that there's a much higher reward. We really see a lot of opportunities where, because we have a strong 16-member on-ground team who has real good context of both Web 2 and Web 3, we are able to identify I mean, we have a very, very strong, investment and diligence process, which covers, our financial team, commercial, legal, all of these kind of parameters that we apply to each sort of our analysis. So, as much as there is a risk, I would also like to point out that there's a much higher reward in emerging markets. Uh, there's also this feature of like information asymmetry that's stronger because there's a lack of developed infrastructure in emerging markets. This is especially true in emerging markets apart from India, but this is definitely applicable across these emerging markets as well. Uh, Another consideration that we have is the time horizon for exits, which I mentioned previously, but how I think we can limit that factor is the fact that we are investing into Web3 companies, and we have another potential exit route, which is the generation of tokens itself, which is a whole new dimension of exits for investors.
Okay, so let's talk a little bit about the adoption cycle, and can you elaborate on what would be the catalysts for Web 2.5 adoption in emerging markets?
That's a great question. So how I think about it is, I think all sorts of technology have like a same shape of adoption, but emerging markets, although it may have the same shape of adoption as other developed markets, the rate of adoption would be higher. And our argument for this is that Web3 in itself is not a luxury in emerging markets, but more so a necessity. There are aspiring founders from India and other emerging markets who really want to tap into global liquidity, who really want to tap into global opportunity, but are limited by the structures imposed by the state. Now, we think these are key areas where Web3 really brings about a whole new dimension of changing up our social fabric as well. Yeah, I hope that helps.
All right, we've got just a few more minutes left here. So, do you feel like the adoption cycle would be similar to the adoption cycle in the developed market? Why or why not?
So I think I mentioned this. The rate of adoption would be higher in emerging markets, whereas the shape would be the same. So you would definitely see that whole early adopter and late laggards adoption phase. But I would definitely like to stress on the fact that, and I can give you examples of this, where in India, for instance, we had the RBI banning crypto back in 2018. That did not stop crypto or Web3 in any sense. In fact, the users in India doubled down on the usage of crypto. And in India, as it stands today, we have we have the highest number of DeFi users, we have the highest number of P2P Web3 users. In the top 100 market cap of like Web3 projects, a large number of them are run by Indian founders. So there's an inherent need and necessity for emerging market founders to dabble in this technology and create products that are valuable for their local markets as well as for their for a global need. So yeah, there's definitely going to be a higher rate of adoption.
Great, great. It's been awesome hearing you talk about this thing you're really passionate and interested in. And I think we'll just take the last minute if you can kind of summarize again the fund and your investment thesis, and we'll wrap it up there.
All right, just a quick 10 seconds on that. Again, we are Hashed Emergent. We love emerging markets and we are focused on that. Emerging technologies and emerging markets. And another point to note is that India is going to be an economic, it is an emerging economic force. And this is an opportunity to invest into a fund that is riding on two major trends, the rise of Web3 and the rise of India's tech sector as well. So we're super bullish on that. We hope you guys can chat with us sometime later about it too.